Welcome to the show, everyone. I'm very excited to welcome back on the show Simon Dixon. He is the co-founder of the investment platform Bank to the Future. He's the author of the book by the same name, a former investment banker and a Bitcoin OG. Simon, how's it going?
Awesome. I mean, it's very troubling times, but at the same time, I believe we're still in one of the most interesting times in financial history. So I think we're going to go deep into that today.
We are indeed. We're going to be talking about economics, debt-based economies, the fiat banking scam, and Bitcoin, and how it fits into all of this stuff. So it's going to be a very juicy one, guys. So make sure you stick around for it. Now, I want to jump into this right off the bat here. You tweeted the other day, you called the depression of 2020 back in 2010. Can you explain a little bit of that to us?
Yeah, I mean, this got a bit of attention recently because my YouTube channel, Simon Dixon, has the archives of all of my videos, and I wasn't very frequent content creator. And one of the videos I uploaded from a presentation I gave in 2009, around about the same time Bitcoin was launched. And it made it to my YouTube channel in about 2010, and it was called The Great Depression of the 2020s. And really, this was just after the last financial crisis when I realized that the government was opting for financial engineering to kick the can down the road a little bit further rather than actually implementing a monetary reform. So this was actually forecasting that we're going to increase the level of indebtedness of individuals, businesses, and governments, and it led to a quantitative easing plan. And I went through some of the different economics, Keynesian and classical economics, and really that led to my belief that we were going to push the stock market into a 10 to 12 year debt cycle, and we were going to lead to, through quantitative easing, it was going to increase the levels of indebtedness. And then I put the bold statement of a Great Depression by 2020. In other videos, I talked about a big systemic risk event that would actually be the cause. Now, what I didn't know, it would be a global pandemic, but I did know it would be some black swan event. And so really that got a bit of attention recently as it started to unfold.
It's crazy when you look at what's been happening as a result of this, right? This event happened. It was kind of the straw that broke the camel's back in many ways. We had a very sick system underlying that. All it took was for a little push to really send things careening into big trouble zone. And so I guess that really brings us to the idea of these debt-based economies. Debt has become so standard, and it's this cancer eating away at most economies these days. So can you speak a little bit on what are the consequences of basing your monetary system on debt?
Yeah, so traditional Keynesian economics states that in time of economic trouble, the government can step in and take on debt, but in times of economic, good economic times, you should repay that debt and balance your books. Now, people blame the current environment on Keynesian economics, but they missed one part, that because the monetary system has been outsourced by the government to the private banking sector, it puts us in Ponzi scheme-like properties, whereby in order to grow the money supply, to grow the economy, you have to get more people into debt. The reason is because if you understand the different forms of money, the vast majority of money today is actually a digital currency. It's a digital representation of the pound, the dollar, the yen, and all these different what people think are government currencies. But they've actually been outsourced to the private banking sector, and the vast majority of them are created every time someone issues a loan. So if you borrow to buy a property or a real estate, then you end up creating new money in the supply if the mortgage is successful. And so what this means is that the governments and the economies are driven into what we call a debt cycle. And that is, in order to have economic growth, you have to have more debt. If you want less debt, you have to have less money. And so this is the traditional business cycle. Every time we go into a downward market, then governments decide to, because consumers aren't borrowing anymore or businesses might not be borrowing, then governments decide to borrow to increase the money supply. Or you have, government-like entities like central banks stepping in as the borrower of last resort, as it were. And so the government tends to borrow from the central banks, which is what we're seeing at the moment. And you have this continuing, ever expanding debt cycle until you actually start to question foundation of money creation, which is why before I was a Bitcoiner, I was a monetary reformer. And we were putting out those important questions of, when you combine the process of creating money with the process of of lending and debt, then there's nothing actually wrong with debt itself. But when you have to have debt in order to have money, you create a Ponzi scheme whereby there's more interest. The interest plus the debt is greater than the actual money supply, so therefore you can never repay the debt. And so you enter into this business cycle, and economics has really just been built upon these incorrect assumptions, and these are what we use in order to model our economies today.
It's insane when you lay it out like that. This is like the biggest scam in the history of humanity, and it's been widely accepted by societies because it's been normalized. But as we know, with all Ponzi systems, at some point there is going to be, the cows are going to come home, the chickens are going to roost, and all that stuff. And so what happens in that situation? I mean, are we actually talking about, a country like the United States actually defaulting on its debt at some point?
So there's when I wrote the book Bank to the Future, I talk about several outcomes. One of them is that exactly that. So the end of the system as we know it could be that when a major economy gets a decrease in their credit rating. But what we saw in 2008 financial crisis is that you can't trust the credit rating agencies, because they put on these toxic assets for political reasons AAA grades, which led to more and more pensions, your pension essentially buying these toxic assets, and so they had to bail out the system. So you can't really rely upon the political neutrality of these credit rating agencies, especially when the majority of them are deeply entrenched in Wall Street, and their business model actually depends upon selling what they, adding their credit rating onto these products so investment banks can sell them. Now, the alternative to that is you end up just continuing the debt cycle. Either the central bank owns absolutely everything, and we end up in an economy owned by central banks, and then they get bailed out by a World Bank, and we end up with one global currency like special drawing rights for the entire world. Was another outcome. Or you end up in 100% tax, which is essentially another, an iteration of communism, which
It's like
is where all of your
neo-feudalism.
income.
It's wild.
Exactly. Or you have a monetary reform. Now, we've had many cases of monetary reform over our history. So in 1945, we got the Bretton Woods negotiation. In 1971, we moved to a complete debt-based fiat standard when we removed the gold backing between central banks. And now we're at the end of a 75-year debt cycle from those initial reforms. And I believe that we will need to have another monetary reform. And I think because that we no longer have all the monetary tools at the central bank's disposal right now, so they've crucified the fiscal budget. So fiscal policy is kind of, propping up the entire economy right now through universal credits and all sorts of stuff. But the government can't bail out and borrow and sustain the whole economy unless they're willing to move to communism. In which case they need to remove private rights from people and just take on everything. The alternative to that is to actually just look at what, I think the last tool they got, so interest rates are down to zero and negative interest rates in some economies. So they've lost that tool. Quantitative easing is no longer effective because they essentially made, the announcements. The government is borrowing money from the central bank, and that essentially puts all those assets on the central bank's balance sheet, and then individuals have to pay tax, and eventually it reaches the point where the tax doesn't even cover the interest on the debt, which is where we're headed to right now. And so the only thing you can do at that stage is you've got one tool left, which is not using the central bank to create money as debt, but just using the government to create money. And so the government still has full authority to create its own money supply. It just happens to just borrow it from the central bank instead, which puts a load of interest into the economy that doesn't need to be there. So I believe that the final tool, and in history we have seen this. So in the American Civil War, the greenback was created, which was a debt-free form of money that was printed to fund the American Civil War, and that is government-created, non-debt-based money. It doesn't get created through a bank. It's not backed by debt. It's just simply created. The problem with that is that money is inflationary. So what we need to find is a way of injecting a new money supply that's not backed by debt into the economy that is also non-inflationary. So one of my forecasts, I released a video on my YouTube channel called The Real Estate Market Crash in the Next 10 Steps. And in that, I outlined exactly what I think comes next, which is that the central bank or the government is probably going to issue its own digital currency, and it's going to be in proportion to banks that go bust. And so rather than you having to lose your money if a bank goes bust, and rather than having to pay it with the FDIC, Federal Deposit Insurance, or whatever you have in your country, I believe that they're going to let the bank go bust, and they're going to give you an app, and that app will have the same amount of money, but this money will be a central bank digital currency. They're also going to distribute universal credits as the economy gets worse by you downloading an app, and in that app it will have a credit which will incentivize you to get into the central bank digital currency. But if you essentially, you've got to think it's very complicated. The economy is a complicated beast. But in its simplest form, when a bank goes bust, because all that money gets destroyed, it decreases the money supply and enters us into a deflationary cycle. That's what they were trying to avoid at the last financial crisis. When governments print QE, that's brand new money. And so whether you get inflation or deflation is determined by whether the new money is greater than the money that's being destroyed. If the new money is greater than the money being destroyed, then you get an inflationary effect. If the money being destroyed is greater than the money being created, then you get a deflationary effect. And then you have to factor in all this interest into the equation, and which is why I believe that many economists get the equation wrong and find it hard to really forecast whether we're going to be moving into deflation, inflation as a result of money creation, because they're not actually looking at the full picture of debt destruction versus money creation. And so this is what I think a lot of, well, not necessarily economists, but a lot of people miss. And these are the trends to look for. But the central bank digital currency, while it is the only option left for the government, and I think it's the option that they'll have to take, it scares the shit out of me in terms of its impact upon personal liberties, freedom, and privacy. So it's a really scary thing we're moving towards.
Absolutely, it is. It's what you've just laid out there. It's an absolute mess, and at the same time, it's terrifying because you realize that the people in charge of the economy, where they're driving us, and what are we seeing right now? What is the conversation that we see constantly in the cryptocurrency space right now? Central bank digital currencies. Almost every major economy is looking at launching one. China's going to launch one. The United States is going to launch one. Everyone's talking about it these days, and it's coming, and it's coming. And what you've just described, we're going to see not just central bank digital currencies potentially issued by the United States and China, and all stuff potentially moving towards that one world currency, which is run by governments and central banks. So that's pretty scary when you think about it. Can you expand a bit, I guess, a little bit on this? Of why central bank digital currencies are actually going to be so gosh darn terrifying, and kind of where Bitcoin starts to fit into this.
Sure, yeah. So there's a few things to unpack there. The first one is why it ends up as one currency. And the important thing to understand is that the US dollar is now used by, 70% of the world's currency is the US dollar. So the US have a very, very unique position in the world to be able to, create $6 trillion of new debt and still be able to have strength in the dollar. And that's simply because every central bank in the world use treasuries, dollars, gold, and their own local currency as reserve assets. So, I'm also forecasting that many will start to use Bitcoin as a reserve asset, but that's a very political currency war-led tactic, which I think is going to come in the upcoming currency wars. But the reason that people need to be scared right now is because the dollar, and that's why, the dollar is still as important as it ever was, if not more important, even though that they are printing, they're creating $6 trillion of new debt. But the problem is that you have organizations like the IMF and the World Bank, which, like the IMF pretends to be a pool of assets from its contributing parties that then, was implemented after the world wars in order to redevelop developing nations. But the problem is that countries like, for example, India during this pandemic, they borrowed $5 billion from the World Bank. Now, they talk about it like it's a bailout or something like that. It's actually a loan, and it's a loan in dollars. So if the dollar is strengthening against the Indian rupee, then this can have catastrophic effects. Also, the loans are tied to you having to redevelop your healthcare system, which means that they figure out a way of the dollars going back to America, and therefore they end up with a third world country crippled by debt, where the debt stays in India, but the dollars make their way back to America. And so you have this system that drives developing economies deeper and deeper and deeper and deeper into debt. But the debt is actually not denominated in their local currency, and it doesn't come from their local central bank. It comes from an organization like the World Bank. And so, it's one thing being indebted to your own central bank, because then you can use financial engineering to reform the currency. But it's another thing to be indebted in a currency that you can't create, that's strengthening against your own currency. That cripples countries. And so that's these then you end up with a debt restructuring when people take on these loans. And that ends to, that can only lead to, one organization controlling most of the world's resources and economies. And that's really one of the trends that I talked about way back in when I wrote the book Bank to the Future. So that's one of the forces. In terms of what you need to be wary about with these central bank digital currencies, is that in order to actually receive the money, you're going to have to download some kind of application. And that application is going to come with additional things that you download to your phone. And I don't want to go too deep into a conspiracy theory, but it's clear to me that the trends of, what the governments want to do in order to open up their economies again are that they clearly want you to have a vaccine. They clearly want you to pay higher and higher rates of tax in the future in order to actually try and balance some of their books, which is an impossible task. So we don't need to pretend that we're trying to balance books, because you can't balance your book. If a government balances their book, they send the economy into a depression.
It's just robbing people and creating a feudal class.
Yeah. So, it's clear to me that, and as we're moving to a deglobalization based economy and people doing transactions online via Zoom, you can imagine scenarios whereby I'm here on my island and my government believes I should be paying this tax. You're there where you are and your government believes that you should be paying on a tax on a transaction, but we're doing it via Zoom, and the US is trying to get tax collection globally. And therefore the transaction happened on Zoom server, but maybe it was routed via China's server, as we found out. Therefore, you've got potentially 4 governments that believe that they are entitled to the tax that will be linked to your central bank digital currency. So they all take their piece, and then you decide, well, 4 governments weren't entitled to that tax, and you enter into a dispute. Well, they automate the tax collection. So now you've got to, try and retrospectively claim back the funds. And then you try and actually get on a plane in order to go somewhere, and they just switch off your passport because your passport is connected to the debt that came from the central bank digital currency. Now, then it turns out that you wanted to contribute some of that money to somebody in Zimbabwe for a charitable organization that you thought needed the money. And therefore, one of those, the EU has certain sanctions, the US has certain sanctions, China has their political agenda, and whichever country might be involved, and you might end up doing a perfectly legitimate transaction in your country, but due to the anti-money laundering policies of another country, because it was routed via Zoom, you end up being opted into those sanctions, and then that then has a black mark against your central bank digital currency and your wallet that then you have to fight, and that might actually start affecting your credit rating and all these different types of things, your ability to get a mortgage in the future. And then you try and get on that plane, and it turns out, well, I didn't want to inject a vaccine into me because I thought it was rushed. Well, you're not allowed on the plane, so we can check, because that was also connected. Whether you got that vaccine or not, or your healthcare records, was also connected to the wallet that you downloaded in order to get access to your central bank digital currency, universal credit, and universal dependency. Due to the fact that we're now in a lockdown, and essentially we've driven ourselves, because of this health crisis, firstly into massive unemployment like we've never seen before, that then leads to ginormous debt bankruptcies, like we're seeing not just from small organizations, but large organizations, which then leads to people defaulting on their mortgages, which then leads to a bank crisis, and therefore, inevitably, a central bank digital currency is a mechanism for bailing out the banks or letting the banks go bust. And let's not forget about that. Who did the banks actually sell all this debt to? Well, they sold it to your pension. So your pension is actually holding all this stuff as well. And so therefore, you can't even rely on your pension anymore. So we are now in the largest regulated Ponzi scheme in financial history. And I believe the demand for money that you can own, money that you can spend, and money that's hard, that has a fixed supply, Bitcoin, is only going to increase every step of this mechanism. And at the moment, it's wealthy people accumulating Bitcoin from the people that can't afford to hold their Bitcoin because they need to pay their bills.
Mm-hmm. It's a rough situation for everyone having to sell their Bitcoin right now, because you see what's building up here. And I just want to mention as well, you mentioned the IMF back there and what they're looking at in India and stuff. For anyone who doesn't know about the IMF, go look up what they did to Bolivia over their water. The IMF is the International Gangster Organization. It's a sick institution beyond belief. Now, you brought up the idea of currency wars, and this is absolutely a fascinating topic, because what you've described is basically a global Chinese social credit-like system. And that was my worry. That is what we're going to see with central bank digital currencies. They're test running it in China, and they'll slowly start creeping that out across the globe as crises come up. It's another reason to take away a little bit of liberty, a little bit of liberty, a little bit of liberty, never get it back, and just more and more and more moves on. So in terms of currency wars, we have a lot of major players right now. China's trying to do their thing. The U.S. are trying to do their thing. Obviously, the U.S. is in a very dominant position. China's in a rising position right now. Other players would like to have a position, like the European Union and Russia and the UK, for example. Where do you see all these currency wars leading us? Who's going to be jockeying for position?
Sure, yeah. So in 2019, before we had this Black Swan event, I released a video called how Bitcoin could become a world reserve currency by 2020. And I talked about a game theoretical scenario where there would be a big Black Swan event in 2020 that causes some of the trends that I talked about. And that then leads us into a global currency war. And so the interesting thing is that obviously China is ahead of the game in their central bank digital currency. I released a video in 2016 about it, how they were building their central bank digital currency, getting ready for a currency war. The issue is that the way that China's economy is set up is that they're an exporting nation. So any exporting nation like Japan or China and many others, they have an incentive to always devalue their currency. So it doesn't make a good world global currency. The reason is because they want their goods to be cheaper for Americans and Australians and Europeans and other importing nations. They also, the trends that I talk about with the IMF, which is that if you take out a dollar denominated loan and it leaves the debt in your domestic country, and the currency ends up going back to America, for example, in dollars, then they become the largest importers because they have so much wealth because of their position with the currency. And then if you're trying to export all your goods to America, then it's always beneficial to get, this is what the trade wars were. Essentially, China was devaluing their currency in order to make their goods cheaper which made them one of the the superpower nations, and using currency devaluations, which is a robbery from your people, in order to actually create more prosperity for your people. So it's kind of two forces competing. Then you end up with those countries not being the ones perfectly positioned to win that. So I'm not too concerned about whether that actually happens. But what I think is going to be interesting is, as we saw in 1945, you had a renegotiation of the currency system and the monetary system, and we had another one in 1971. And now we have this complete dominance by the dollar and the strengthening of the dollar relative to other currencies. I think smaller nations are going to look at how they could use Bitcoin as a game to actually try and get ultra high power in an environment where they're nothing. So Japan has been putting together great regulations due to the fact that Mt. Gox was there, and they've had more hacked exchanges. So they put together a regulatory environment in order to simultaneously meet their anti-money laundering objectives, but also support the growth of the crypto Bitcoin industry. So they're really nicely positioned to actually get some kind of dominance. Their banks actually mine Bitcoin. So the largest bank in Japan, SBI, is one of the largest miners of Bitcoin. And they've been investing in the ecosystem, but also smaller nations that have been trying to get a dominant position. So you can actually, the advice that I would give a smaller government at the moment is I'd encourage them to dedicate some of their electricity towards mining Bitcoin. And once they've got a decent position in Bitcoin, get their central bank to actually hold some reserves in Bitcoin and announce it as that they are diversifying against the dollar by adding Bitcoin as a reserve asset. This creates an interesting game of chicken, whereby the price increase that could actually have can actually drive, like we saw in Bulgaria, where they essentially confiscated 200,000 Bitcoin from some criminals, and no one knows where those 200,000 Bitcoin are, but they're now worth more than the national debt of Bulgaria combined. It creates an interesting scenario whereby you can use that in order to actually rebalance your book. So, and I think that small nations are going to take that bet. And then it really ends up with, it just requires a medium, an important central bank like Japan that has been really repositioning their regulations to become dominant in the industry, to actually decide, well, based upon this, we're going to use this to try and actually win a currency war. And then the last economies to adjust would be something like Europe and America, who have the most to lose from a change of monetary policy. So I could imagine a scenario playing out. So I talked about that in 2019, and that would be the kind of the prerequisites for something drastic happening in 2020. Now, it wasn't a forecast that would happen in 2020. I was just trying to show them a set of extreme events that can make something like that happen. And then, therefore, you really don't want to be the last one trying to scramble for the Bitcoin at that stage.
That's it. If you when the first central bank announces it's going to be country level FOMO, which is going to be something wild. I also think Japan's a pretty strong contender. I've also thought Switzerland also could be one that could make those moves early on as well. Again, we already have potentially countries doing it. You see, like I said, with what's happening in Japan with banks actually mining Bitcoin. I mean, it's some next level stuff going on. There will be a moment, it will come, and people doubt that, but this is where we're moving. Now, the final question I have here for you today: what is an investor to do in this situation? All this craziness is going on. How do you invest in such a wild economy right now?
Yeah, so this is something I'm really passionate about at the moment, I gave a presentation the other day at the Asia Crypto Summit. I uploaded that video to my YouTube, and I talked about the 6 investments that I'm making in the current environment. I'll outline them right now. First is a traditional portfolio that is balanced for inflation, deflation, economic growth, and economic decline, because we really don't know what political negotiations are going to be made in the monetary reform, because that can lead to an inflationary or a deflationary economy. It can lead to prosperity and economic growth, or economic decline. A traditional portfolio as a percentage. Then you need a plan for what happens if the traditional financial system implodes. Bitcoin is a way to own your own money, spend your own money. and have the hardest form of digital global money that the world has ever seen. So that makes a big portion of it. I also take some of the Bitcoin and put it into counterparty risk in order to try and generate low yield for benefiting from the trends that speculators want to speculate. Most traders lose money in the markets, and you can lend your Bitcoin to them, and then it's collateralized and therefore receive income. But you have to take counterparty risk, so you shouldn't be doing that with a large part of your portfolio. Also, I believe one of the things that I'm doing is making sure I'm increasing my dollar exposure, because I do believe that in the short term, the America and US dollars, because it's such a dominant currency. But I'm doing that via stable coins and receiving yield on them so that I can increase my Bitcoin position as well using
Nice.
the yield. But you need to actually be careful with there's different risks involved in different stable coins. Some of them have setups whereby it's diversified across like trust structured, whereby even if the bank went bust, the money would still be legally segregated, versus ones that are held in a traditional bank, in which case you're exposed to bail-ins and FDIC. So there's an actual an art to understanding some of the risk in some of these. I believe that ETH is going to take a really dominant position in the DeFi space, and because it's perfectly positioned at the right time to actually support. Now, again, this is about increasing Bitcoin position. So I don't see ETH as money, as hard money. I see ETH as a mechanism, as a protocol for decentralized finance, which I think is going to need to grow very quickly. And then putting a percentage of that back into the Bitcoin reserves. And finally, equity in Bitcoin companies. So I'm diversified geographically across different exchanges in the industry. The reason that Bitcoin exchanges are such an interesting investment from my perspective is because when the markets crash, crypto exchanges do really well. When markets go up, crypto exchanges do really well. So I'm holding an equity portfolio in the industry through Bank to the Future, obviously, because that's the only place you can really build a diversified portfolio across geography, different areas, and also diversified across early startups and more established companies in the industry. My belief is that the last 10 years were ultra high growth. So, the valuation increases that we received from our equity positions in companies like Kraken were astronomical. But I believe the industry is only just getting started. So I believe that the next 10 years are going to be significantly higher growth than the previous 10 years in terms of the companies that are going to remain dominant. So you have to have a diversified pool in order to take advantage of that. And one of my little pet projects right now is that, and I was going to speaking to you about it before, is I'd like to take, there's two people that have been constantly contacting me recently. So I've been releasing a lot more content. There's people that have income, and there's people that might have savings in traditional, that's exposed to traditional. So one of the things I'm going to do is I'm going to take from scratch $1 million of my personal savings and show you exactly what I would allocate if I was starting from scratch right now. And also what I would do if I had zero savings, but just an income. Unfortunately, if you don't have income and you don't have savings, there's not a lot you can do in this right now. And I'm very, it's very sad that that is the position for a lot of people. It depends whether the government's going to continue paying that income, or you're going to adjust to some of the new trends. Because one thing that is inevitable, predictable, and guaranteed is that our economy is going to have massive, massive change. And really, all the governments globally have chucked everything. I'm talking everything that they've got at this. And therefore, the only solution is a radical monetary reform. And you need to be positioned for whatever happens at the other side, and prepare for a lot of different eventualities, because you're playing politics at the same time as speculation.
Wow. Very, very interesting. That's Simon, this has been an absolutely amazing chat. Thank you so much for your time. I mean, that's juicy. I'm gonna have to, But listen to this one again. There's so much great information in there. So thank you so much for sharing your insights into the economy and building a portfolio and all this crazy madness that we see going on out there. And of course, there were links down below if anyone wants to find out about Bank to the Future and what they do. You can go ahead and check that out as well. But Simon, thank you so much.
Okay, thanks for doing what you do as well, because I just believe that education is the most important thing that people are going to need in the current environment. So I hope that this has inspired some different thinking.
Thank you so much.
Hello, everybody. Really appreciate you watching that video. Hope you enjoyed the content and you got a lot out of it. If you'd like to get a lot more, then please do subscribe to my YouTube channel. Hit the subscribe button, hit the bell symbol, and YouTube will send you a notification every time. I'm also giving content on Twitter at Simon Dixon Twit, so you can follow me there. Over the last 10 years since I've been involved in the industry, from speaking at the very first Bitcoin conference in the world to actually before that, when I was involved in presentations for the banking and monetary reform community, I've always been focused on working with the high net worth investors at Bank to the Future and investing in the crypto companies and Bitcoin and fintech companies that made this industry. That meant that I never really focused on building a following, because I really just focused on the relationships that I built. But now there's so much financial uncertainty. There's so much challenges that people are experiencing in both the economy and their personal financial situation, that I really want to focus on making sure that more and more people get these messages. If you leave a comment under this video, let me know what you'd like to see in future videos. And also subscribe to the channel, and I'll make sure that I'm giving you the best information, the best thinking I've got, which regularly changes as this financial system unfolds. To get that information, subscribe, get the notifications, follow me on Twitter, like, share, so that more people can get this message. And I'll make sure that you're on top of the information curve as this financial system unfolds. And remember, no matter how bad it gets, you're alive at one of the most exciting times in financial history. Peace.